Ladies and gentlemen, Asian guy here. I need you to stop what you're doing right now. Put down your phone, close the other tabs. Listen to me very carefully because something is happening in the silver market. At this exact moment that has never happened before in the history of modern finance. I'm not talking about a price move. I'm not talking about a technical chart pattern or a momentum breakout. I'm talking about a coordinated attack by millions of retail investors on one of the oldest, most protected manipulation schemes in financial history. The banks know it's happening. The regulators know it's happening, and judging by the emergency meetings that are taking place behind closed doors right now, they are absolutely terrified. The headlines call it a meme stock moment. Reddit madness. The traders who squeezed GameStop are now coming for silver. Over the weekend, Wall Street bets exploded with posts about silver. Hundreds of thousands talking about buying physical metal, mining stocks, SLV options. The message was simple. The banks are short. We can break them. But here's what the mainstream media isn't telling you. This isn't just another retail squeeze. This is the match being thrown onto a powder keg that has been building for 40 years. The Reddit traders didn't create this crisis. They just gave it a name and a crowd. The structural short position was already unsustainable. The physical supply shortage was already acute. What the retail army is doing right now is forcing the system to admit something it has spent decades denying. Silver has been manipulated. The paper market is a fraud. And the people who have been warning about this for years were right. Let me walk you through the timeline because it matters. It started with posts on Wall Street bets about silver being the most shorted commodity in history. People pointing out that JP Morgan paid a $900 million fine for spoofing the silver market. Others talking about the disconnect between the paper price and the physical premiums. Within hours, there were dozens of posts with thousands of upvotes. People were posting screenshots of their silver purchases. Bars, coins, mining stocks, ETF shares. The energy was absolutely electric. It felt organic. It felt like a spontaneous movement. But consider another possibility. Who benefits from a retail squeeze on silver? For months, we've been tracking the structural deficit in silver. We've been watching the COMEX inventories bleed dry. We've been documenting the massive accumulation by Eastern buyers. We've been reporting on the disconnect between paper price and physical reality. All of that was happening quietly in the background. The system was under stress, but it was manageable. The banks could still tamp down rallies. And then, this weekend, a retail army appears out of nowhere with perfect timing and perfect messaging. Buy silver, break the banks. Does that sound organic to you? Or does that sound like someone just lit the fuse? In geopolitical finance, nothing happens by accident. When millions of people suddenly coordinate around a single thesis at the exact moment the system is most vulnerable, you have to ask who whispered the idea into the room. The entity that benefits most from this squeeze isn't a Reddit trader hoping to flip money. It's the entity that has been quietly accumulating physical silver for years while keeping the paper price suppressed. It's the entity that needs a catalyst to break the suppression machine without looking like the manipulator themselves. The commercial short position in silver is absolutely massive. We're talking about hundreds of millions of ounces sold into the paper market by just a handful of institutions. For decades, this worked perfectly. They would sell paper contracts to suppress the price, retail investors would get discouraged and sell, and then the banks would cover at a profit. Rinse and repeat. The game was unbeatable because they controlled both the supply of paper and the narrative around the price. But the game has a fatal flaw that was always there, waiting to be exploited. It only works if people trade paper for paper. It breaks the moment people start demanding physical delivery, and that's exactly what's happening right now. The Reddit army isn't just buying call options to speculate on price. They're buying physical metal. They're walking into coin shops and clearing out inventory. They're ordering bars online and draining dealer stocks. They're standing for delivery on futures contracts. They're doing the one thing the banks cannot defend against. They're converting paper promises into physical atoms. And there simply aren't enough atoms to go around. This morning when the Asian markets opened, silver didn't just move, it teleported. It gapped from $71 to $74 in a matter of seconds. The order books were completely empty. There were no sellers at any price. The algorithms that usually step in to provide liquidity were nowhere to be found. And then at 75, suddenly, almost magically, a massive sell order appeared out of nowhere to cap the move. That wasn't a retail trader taking profit. That was a bullion bank desperately trying to prevent a psychological breakout. Because if silver breaks 75 and holds, the next stop is 80. And if it hits 80, the narrative shifts instantly from squeeze to full-blown crisis. But selling paper only works if people believe it's real. Trust evaporating. Screen shows 75, dealers charge 85. Try buying online 6 to 8 weeks. COMEX vaults historic lows, system breaking. Banks trapped. Short more, dig deeper. Let price run, shorts explode. Deliver physical, expose shortage. Every option worsens it. Checkmate in slow motion. Headlines say bracing for chaos. banks calling risk managers, clearing houses checking defaults, regulators drafting emergency plans, Fed preparing to step in, not bracing for volatility, bracing for liquidation cascading into crisis. Silver isn't isolated. Solar, EVs, electronics, medical, military, price spirals break supply chains. Tesla, Samsung, defense needs silver. No metal, production stops. Production stops, economy stalls. Economy stalls, debt bubble pops. But there's a deeper layer here that almost nobody is talking about. The silver market is one of the last remaining pressure valves in the global monetary system. When people lose faith in fiat currency, they buy gold and silver. When governments print too much money, gold and silver rise to reflect the debasement. The banks and central banks have spent decades suppressing precious metals prices, specifically to hide the inflation and maintain confidence in paper money. If silver breaks free and reprices to its true value, it sends a signal to the world. It says the dollar is dying. It says the system is broken. It says the emperor has no clothes. That's why this Reddit squeeze is so much more dangerous than GameStop. GameStop was a failing video game retailer. It didn't matter to the functioning of the economy. Silver is a strategic commodity and a monetary metal. If the squeeze succeeds, it doesn't just bankrupt a few short sellers. It exposes the entire architecture of financial control. It proves that the prices we see on our screens are fabricated. It proves that the markets are rigged. And once that cat is out of the bag, you can't put it back. Who benefits from exposing this? Who wants dollar system cracked? China, Russia, BRICS, preparing for post-dollar world for years, buying gold, buying silver, building alternative payment systems. Now, perfect moment, retail army attacks Western monetary metal suppression. Coincidence? Strategy? China doesn't run Wall Street bets. In great power competition, don't control pawns. Nudge them at right moment. Let momentum do rest. Break dollar dominance? Don't invade. Weaponize information. Amplify narratives. Let Western contradictions tear it apart. Beautiful part is plausible deniability. Silver explodes. Blame Reddit degenerates. Real beneficiaries sit quietly holding physical, watching West implode. On ground right now, data is stunning. Dealers reporting panicked buying. People calling for immediate silver. Not haggling, not waiting. Buying at any price because availability matters more than cost. Get in before metal runs out. Major dealers suspending orders. Mints struggling. US Mint, Canadian Mint, Perth Mint working overtime, still falling behind. Not speculation bubble, supply crisis. Buying because metal won't be available next week. Terrifying part, industrial users waking up. For years, Tesla and Samsung relied on just-in-time inventory, assumed silver always available, didn't stockpile. Now procurement teams see chaos, ask uncomfortable questions. What if retail drains wholesale? What if we can't get silver for production? Moment they ask, they buy. Not speculation, survival. Industrial buyers change the game. Retail buys hundreds of ounces. Industry buys hundreds of thousands. Price insensitive because silver cost is rounding error versus shutdown. Tesla needs 10 million ounces this quarter. Choice is pay 80 or stop production. They pay. This is what banks stare at. Demand tsunami starts with retail, amplified by FOMO, turbocharged by industrial panic. No way to stop it. Can't print silver, can't talk price down, can't call Fed for physical bailout because Fed has none. US government sold strategic stockpile decades ago. No cavalry, banks alone. What happens if this goes parabolic? Stage 1, where we are now. Retail buying, premiums rising, inventory tight, banks can still manage. Stage 2, industrial panic. Real money enters. Demand jumps to hundreds of millions of ounces. Banks lose control. Stage 3, margin calls, cascade. Price rises, shorts bleed. Clearinghouses demand collateral. Banks sell positions to raise cash. Stocks drop, bonds drop. Silver squeeze triggers market correction. Stage 4, liquidation. Banks can't post margin, forced to cover at any price. Price goes vertical, charts break, algorithms freeze. Trading halts. Media admits silver was rigged. Stage 5, contagion. One bank fails. Counterparty risk spreads. Interbank lending ceases. Central banks print emergency liquidity. But printing to bail out commodity squeeze validates the thesis. Currency dying. Hard assets, only shelter. That's the doomsday scenario. That's the nightmare the regulators are bracing for. And the retail traders on Reddit have no idea how close they are to triggering it. They think they're just making a bet. They think they're sticking it to Wall Street. They don't realize they're holding a match next to a gas leak. Now here's the question I keep coming back to. Is this really just a retail movement? Or is someone using the retail energy as cover for something much bigger? Because if you wanted to break the Western financial system without firing a single shot, this is exactly how you would do it. You would wait for the structural weakness to build up over years. You would wait for the inventories to drain to historic lows. You would wait for the short positions to become completely unsustainable. And then, at the perfect moment, you would light the fuse. You wouldn't do it yourself. You would let the mob do it. You would amplify the message on social media. You would make it go viral. And you would sit back and watch the chaos unfold while maintaining perfect, plausible deniability. The genius of this strategy is that it's completely unstoppable. You can't shut down Wall Street bets without looking like you're protecting the banks and silencing free speech. You can't ban retail traders from buying silver without admitting that their buying threatens the entire system. You can't stop the squeeze without revealing that the market was rigged all along. Every single move the authorities make to stop it just proves the conspiracy theorists were right all along. It's a perfect trap. Maybe that's too much credit to grand strategy. Maybe just retail traders bored after GameStop decided to take on silver. Maybe no puppet master, but orchestrated or organic, outcome is same. Silver market about to experience volatility reshaping global finance. Banks on wrong side, central banks preparing emergency measures, retail charging forward with no idea how dangerous the game is. What happens next? Asian markets open tonight. Will momentum continue? Will price break 75 toward 80? Will dealers keep up or buy button disappear? Will banks smash with paper or realize selling into shortage is suicide? Will media dismiss as meme or admit something serious? But here's what I know. Silver market was already broken before Reddit. Shorts were underwater. Deficit was real. Inventories drained. Retail traders exposing crime scene hidden for decades. Forcing the world to look at what banks spent billions hiding. Whether they meant to or not, started something that can't stop. Once you wake the crowd, show them the lie, prove game is rigged, no going back. Banks brace for volatility, but that's least of their problems. Should brace for accountability, for millions realizing they've been robbed, for collapse of trust in the system they built. Once trust is gone, no paper promises fix it. Only the real thing matters. Only physical survives. Whoever holds it writes the rules of what comes next. Reddit traders think they're making a trade, but they're forcing a reckoning, pulling back the curtain, breaking the machine, and the people who built that machine are terrified, as they should be.